SpaceX is about to make financial history. The company is officially preparing for an IPO that could reach an unbelievable $2 trillion valuation. Make no mistake, this is shaping up to be the absolute biggest financial event of the decade. But if you think you know what SpaceX does, you need to update your perspective. This isn't just a rocket company going public anymore. It is a massive three-headed monster combining space launch, global telecom, and cutting-edge artificial intelligence. Elon Musk is fundamentally changing the playbook for how private companies hit the public markets. If you thought the original Tesla stock story was a wild ride, you haven't seen anything yet. For years, Elon Musk completely rejected the idea of a SpaceX IPO. The short-term, profit-driven interests of Wall Street would sacrifice the ultimate mission of settling Mars. But something fundamentally shifted in his strategy. Recently, Musk confirmed that the IPO is finally happening, specifically targeting the summer of 2026, likely in June or July. Why the sudden change of heart? One major factor is simply that Father Time is ticking. Musk is now in his mid-50s, and he wants to personally see the seeds of Mars settlement planted in his lifetime. Launching hundreds of rockets to build a sustainable city on another planet requires astronomical amounts of money. The company recently closed a private tender offer where employees were permitted to sell their insider shares to venture capitalists at an $800 billion valuation. While that is an incredible number that made many early employees multimillionaires, to achieve Musk's ultimate interplanetary vision, SpaceX needs far more capital than private markets can supply. Right now, SpaceX completely dominates payload to orbit. The company is so far ahead that competitors like the United Launch Alliance, which is a historic joint venture between Boeing and Northrop Grumman, are struggling to keep up. Even Jeff Bezos's Blue Origin in its New Glenn rocket have a very long way to reach SpaceX's rapid cadence of rocket reuse. Meanwhile, Starlink has become a massively successful global telecom company, driving the vast majority of SpaceX's current revenue. But launch services and satellite internet are no longer enough to satisfy Musk's ambitions. Musk sees a near future where SpaceX transforms into the ultimate backbone of the global AI ecosystem. So, how exactly is this mega IPO going to work? As of April 2026, SpaceX has confidentially filed its S-1 document with the SEC. The S-1 filing is a massive document detailing every aspect of the business, from audited financials to precise revenue numbers, giving public investors their first true look under the hood. Reports indicate they are targeting an unprecedented valuation, somewhere between $1.75 and $2 trillion. The goal is to raise up to $75 billion in cash. To put that immense scale into perspective, the previous IPO record was Saudi Aramco, which raised $29.4 billion in 2019. SpaceX is going to absolutely crush that number, instantly placing the company among the top 5 or 6 most valuable companies in the S&P 500. It is important to note that Elon Musk recently pushed back on some of the wildest financial estimates. After a Bloomberg report highlighted the staggering $2 trillion valuation, Musk posted on X warning his followers, "Don't believe everything you read, Bloomberg publishes BS." Nevertheless, the sheer scale of this upcoming stock offering remains totally unprecedented. When the company hits the public market, it will be reportedly a unified, combined entity. It will include the core SpaceX launch business, the highly profitable Starlink network, and xAI, Musk's highly publicized artificial intelligence venture. xAI actually merged with SpaceX in early 2026. When this IPO executes, the shareholder structure will look completely different from standard Wall Street offerings. In a typical tech IPO, everyday retail investors are given roughly 5 to 10% of the available shares. However, Musk reportedly wants to allocate a staggering 30% of the SpaceX IPO strictly to retail investors. This is a massive shift, representing an issuer designing the shareholder base from the top down before a single share even trades on the open market. Musk knows exactly what a loyal retail base can do for a CEO. Everyday retail investors own about 30% of Tesla stock. Those very same retail investors backed his massive $56 billion pay package after a Delaware court struck it down, and they subsequently approved a new one worth up to $1 trillion. By bringing his retail fans into SpaceX from day one, Musk is ensuring he maintains an army of loyal voters who will ignore short-term volatility and let Elon be Elon. Here is the most crucial, mind-bending insight regarding this entire IPO strategy. Over the next 5 to 10 years, Mars settlement will not actually be the primary focus of SpaceX. Instead, the true near-term goal is building massive data centers in space. The global economy is currently engaged in a massive AI arms race, and data centers require immense amounts of land, cooling, and electrical power. SpaceX's radical solution is to construct 5-gigawatt orbital data centers directly in space. These floating structures would feature super-large solar and cooling panels spanning an unbelievable 4 kilometers in length and width. By comparison, the massive solar arrays on the International Space Station are only about 100 meters across and produce a tiny fraction of that power. SpaceX plans to autonomously assemble these giant data centers using a scaled-up version of Starlink V3 satellites, which are equipped with high-speed laser links. The company is uniquely positioned to pull this off because absolutely nobody else possesses their massive launch capacity. The enormous Starship rocket is vastly more capable than our current orbital infrastructure needs. In fact, Musk essentially needs a massive project to justify building a factory that churns out hundreds of Starships. Putting data centers in orbit perfectly fills that gap, transforming Starships into the ultimate cargo trucks. If they succeed, SpaceX can potentially offer AI computing power at half the price of their terrestrial competitors. This completely pivots SpaceX from a launch and telecom enterprise into a dominant AI infrastructure powerhouse. The $75 billion raised in the 2026 IPO will serve as the ultimate AI war chest, buying the necessary GPUs to make this science fiction vision a reality and to directly compete with giants like OpenAI and Anthropic. This IPO will completely redefine the future of private tech investment. For many years, the venture capital industry has been starved for real liquidity events. Startups have preferred to stay private much longer, severely limiting the exits available to early backers. The massive SpaceX IPO will act as a major catalyst for the broader market, proving there is still massive capital available. It will serve as a high-stakes test of whether public markets are willing to fund highly strategic, capital-intensive companies with delayed profitability. If this IPO is a success, it will write the definitive playbook for other major AI listings, like the anticipated public offerings from OpenAI and Anthropic. Furthermore, the mechanics of how this stock will trade are already causing massive controversy on Wall Street. There are serious reports of potential structural manipulation regarding the SpaceX listing. Nasdaq is reportedly considering a special rule change that would allow SpaceX to enter the prestigious Nasdaq 100 index after just 15 trading days. Combined with a rumored 5x float multiplier rule, this creates a deeply controversial scenario for the broader market. Passive index funds, total market ETFs, and everyday employee 401k plans would be mechanically forced to buy massive amounts of SpaceX stock on day one. This guaranteed liquidity helps secure a highly lucrative exit for girly venture capitalists, but it essentially forces everyday people into the trade whether they actually want to buy the stock or not. Even without forced buying, natural demand for this stock is already off the charts. In previous private tender rounds, there was up to $20 billion of verified demand, competing for just $2 billion worth of available employee stock. Right now, everyday retail traders are scrambling for any possible pre-IPO exposure through secondary platforms like Forge Global and Rainmaker Securities. Some investors are even buying proxy investments like EchoStar, which owns billions in SpaceX stock due to previous Spectrum license deals. The hype is unprecedented, with retail traders even speculating that Musk might choose the provocative ticker symbol SEX for the public listing. At its core, the SpaceX IPO is the ultimate high-stakes gamble. SpaceX is betting its entire future on the thesis that artificial intelligence and space infrastructure will seamlessly merge. But there are real, serious risks. If artificial intelligence turns out to be an overhyped bubble, or if large language models hit a sudden development wall, SpaceX will have invested tens of billions of dollars into orbital infrastructure with very little financial return. Public investors will also demand quarterly accountability, which will undoubtedly cause friction and could potentially make it harder for Musk to seamlessly fund his long-term dream of colonizing Mars. There is also the threat of immense public backlash. With Musk holding roughly a 42% stake, his personal wealth could soar by an additional $1 trillion, fueling intense Luddite negativity. Yet, Musk has made massive, seemingly impossible bets before, and he has consistently won. When he doubled down on Starlink and rapid rocket reuse a decade ago, many traditional aerospace experts called it foolish. Today, Starlink is an absolute cash cow, and SpaceX leads the world in launch capabilities. The 2026 IPO is simply his next massive double down. He is securing the ultimate capital war chest to completely conquer the AI era. If SpaceX successfully builds